So what do you expect when you keep borrowing money endlessly and in order to pay back your debt, you borrow even more? It's no wonder the United States just got downgraded. So I have breaking news, and this is a big one. The ratings agency Fitch just downgraded America's credit rating from AAA to AA plus. And this is a slap in the face and is telling the world that the United States has a spending problem, they have a borrowing problem, and investors could get burned one day. And we said many times before, you cannot keep borrowing money endlessly without having consequences. Even the United States cannot escape reality, and there's going to be pain down the road. And because of this downgrade, the US government will have to borrow money at higher interest rates. And it's not a question of if they can sell their bonds or not. The big question is the interest payments. The bigger the interest payments, the closer we get towards disaster. And it will manifest in two scenarios. Either the US government cuts spending on social programs and even defense, or they choose to borrow even more money to cover all the ballooning interest payments, and that will lead to a debt spiral which could destroy any credibility left. Now, of course, Janet Yellen, she's angry, she's outraged, and she's scolding Fitch. Yellen is calling the decision arbitrary and based on outdated info. But her next comment really shows how oblivious she is. Fitch's decision is puzzling in light of the economic strength we see in the United States. And this tells us that she herself doesn't know what's driving the US economy. This artificial strength we are seeing is a direct product of deficit spending. This is Martian Twilight Zone economics. And here's a chart that will just shock you. Do you know how much government spending contributes to America's GDP? In 2022, it was 37%, and it hit a high of nearly 50% during the 2020 lockdowns. Throughout modern history, government spending has been well above a third of GDP in the country, and that is borrowed money being spent to keep the economy going. It is not genuine growth. Then we have the White House coming out to say how it defies reality to downgrade the United States at the moment when President Biden has delivered the strongest recovery of any major economy in the world. But this recovery is being financed by the world itself through deficit spending. The production and supply of goods haven't increased. It's just more spending to paper over the pain. And now the emperor has no clothes. And the issue here is the US government's inability to rein in spending and make budget cuts. It's actually as simple as that. There are a ton of entitlements that keep getting bigger. America's constantly shipping money to Ukraine to help fight a war that doesn't seem to end. And all those military bases around the world, they need money. Now, the US dollar isn't really under attack by China or Russia. It is under siege by deficit spending and inflation. And listen to what Fitch had to say about the downgrade. It's not just the debt limit. What we have seen in the United States is a steady deterioration in governance. Now, Fitch is basically saying the US government just can't stop borrowing and spending money. And this is where things get really scary. You can't just borrow money forever. There will come a point in time where interest payments will get unsustainable. Now, back in 2022, the Congressional Budget Office, the CBO, estimates that the federal government will spend $400 billion in interest payments alone last year. And that's 8% of all federal revenue collected. But that was a year ago. Because the Treasury keeps borrowing at yields of 4 to 5% today, the interest payments are just going to soar. By 2033, the interest cost alone will triple to $1.4 trillion. And that is horrifying because it will cause deficit spending to increase even more. Not only must you now borrow money to fund your current liabilities, but now your interest payments will be 1.4 trillion. But here's the most frightening chart that we must pay attention to. And this is the net interest cost as a percentage of revenue. And we can see the trend is becoming exponential. By 2053, the net interest cost will account for nearly 40% of federal revenues. That means out of $10 the government brings in, $4 will be spent to pay off the interest on the national debt. And this is what I mean when I say there's a limit to how much money even America can borrow. What happens when interest costs hit 60% or 80% or even 100% of revenues? There are only three routes left, and either one will destroy the US economy and the dollar. Now, the first is raising taxes massively on the public, and if they do that, it will crush the consumer and really destroy the US economy. Now, the second is outright defaulting on the debt, right? They might just go, hey guys, we are not paying and there's nothing you can do. And the final way, which is more likely, is to get the Federal Reserve to step in. Powell will monetize US treasuries and print money to inflate the debt away. And this is the most likely route, but will absolutely crush the dollar. Now, I must say it's amazing that things have lasted so far, but guess what? It's gonna last a little longer. What we have mentioned earlier is the end game for the national debt and the US dollar, but in the immediate term, there won't be any effect on the dollar and the treasury demand yet. And this is where we need to understand how powerful the dollar system really is. It won't break tomorrow because it is a self-reinforcing system. Pulling up a story from Reuters, dollar shocks off Fitch US credit rating downgrade. Instead of the dollar index crashing, it has actually stayed firm and rallied a little. And you might be thinking, what kind of black magic voodoo is happening here? A downgrade means that US bonds should be in doubt, and that in turn should crash the dollar strength. So why is the inverse happening where the dollar gets stronger? And that's because the world is still heavily dependent on dollars as the world reserve currency. Whether you need to buy food or energy, you still need dollars to transact. And listen to this statement from Rabobank because it is a perfect description of why the dollar isn't falling yet. Even when there's bad news, there is a behavior where businesses and people think, I need my dollars to pay my invoices and dollar denominated debts. People still need dollars around the world. Remember that the majority of global debt is priced in dollars. So when people hear there's a downgrade, it causes a rush for the reserve currency. And here's how this crazy system actually works. Because Fitch downgraded US debt, this creates a big fear. It's the fear of a US dollar shortage. Because if the chances of treasuries defaulting is higher, this should reduce demand. And if investors buy fewer treasuries, there will be fewer dollars entering the economy over time. And this causes people to ironically rush to dollars and run back to US bonds as a safe haven. And that's why we call it a self-reinforcing system. It's not an easy system to break, but it won't be the Chinese or the Russians that will break the dollar. It will be America's own deficit spending. And this downgrade has officially painted a target on the US dollar and is reminding investors that America is debasing their own currency by endless borrowing. And make no mistake, this is going to accelerate de-dollarization. Countries are going to start asking questions. What if America can't stop spending? Will the Federal Reserve step in and print money to rescue the US economy? Because if that happens, all the dollars that I hold will get debased through inflation. And I want us to examine Yellen's pushback to Fitch. Treasury securities remains the world's preeminent, safe and liquid asset. But how long will that last? Because now it's not just sanctions that are making people nervous, it's also the debasement of the world reserve currency. And listen to this, yuan exceeds dollar in China's bilateral trade for the first time in history. And this should sound alarm bells for Janet Yellen and everyone else in the United States. The yuan was used in 49% of China's cross-border transactions from April to June, toppling the dollar for the first time. And this means China is doing more bilateral trade in yuan. They are settling payments outside of the dollar. And this is the world's second biggest economy that's pushing for de-dollarization. And you can bet they will use this downgrade as an excuse to rally the world further. And it's not just bilateral trade, the percentage of dollars kept as central bank reserves will drop too. And we know that the dollar is around 58% of central bank FX reserves around there. Central banks, they hold dollar denominated assets like treasuries to earn some yield and to defend against their own currency devaluations. But in a recent survey, the majority of central banks believe that their percentage of US dollars holdings will drop to 40 to 50% of their reserves. And there are some banks that will hold more, but a big number are looking to reduce their dollar holdings. And this isn't good news because it also means fewer treasuries being bought over time, and that will put upwards pressure on bond yields. So the cost for borrowing for America will stay high. And where's all this money going to? Well, it's going to gold, and the reasons are very obvious. The majority of central banks hold gold because of the weakness of the dollar. Over 70% of central banks buy gold because it is a long-term store of value and it has no default risk. Unlike the US treasuries, you can't print gold as well. Plus, there's no chance of a default and you get nothing back, right? So the US government has essentially shot themselves in the foot again. First, it was the sanctions on Russian assets and that was bad enough. Now is this downgrade, and that's why the biggest risk to the dollar isn't Russia, it isn't China either, but America itself. Eventually, if deficit spending continues, the US government will default on its debt and it will cause chaos in the world economy. And it won't be tomorrow, guys, it won't be next year, but the date is fast approaching. Remember that the limit on federal borrowing has been suspended until January 2025, and that means currently there is no debt ceiling. Biden can borrow as much money as he wants until after the elections to keep the US economy afloat. And the big question is, how much damage can Congress do in the next 18 months? Since the debt ceiling was suspended, the US national debt has spiked by $1.2 trillion, and that is an insane amount of borrowing in just a month. But guess what? The US Treasury isn't done yet. By September this year, Janet Yellen is going to borrow another $1 trillion. The previous estimate of $733 billion apparently wasn't enough. Congress needs more money to spend. And the story gets even worse. In Q4 this year, from October to December, the Treasury expects to borrow yet another $852 billion. They are going to flood the system with more debt, which will raise yields. And this means the interest payments are going to get bigger and scarier. So we have to keep an eye on US deficit spending. The war isn't stopping. Defense spending will continue to grow, and entitlements have to be paid. And the end game is gonna be a default. And that's why the biggest danger to the US dollar isn't China, it isn't Putin, it is endless deficit spending. But let me know what you think in the comments below. How bad will deficit spending get? Will the United States get downgraded again? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.